Break of structure versus change of character. If you've ever been confused by this, you are not alone. These are two of the most important concepts in smart money trading, and understanding the difference between them can completely change how you trade. So let me break it down for you simply. A break of structure, or a BOS, happens when price continues in the direction of the current trend. In an uptrend, that means price breaks above the previous higher high. In a downtrend, it breaks below the previous lower low. When you see a BOS, that tells you the trend is still intact. That's where continuation traders will look to enter with the trend. Now, a change of character, or a CHOC, signals a potential reversal in trend. In an uptrend, if price suddenly breaks below a previous higher low, that's a CHOC. In a downtrend, a break above a previous lower high signals a CHOC. Think of a CHOC as your first early clue that the momentum is shifting. That's where smart traders start preparing for trend reversal setups. So to recap, a BOS is where price continues in the direction of the current trend, whereas a CHOC is where price breaks in the opposite direction of the current trend, signaling a potential trend reversal. Now that you have a basic understanding of each, let me show you how to use them in trading. Step No. 1 is to start with higher time frames like the 4-hour, the daily, or even the weekly to get the bigger picture. On these longer time frames, you'll find the overall trend direction and major areas of structure. Once you identify these levels, drop down to a lower time frame like the 1-hour or the 15-minute to watch for either a BOS or a CHOC. Remember, a BOS is where price breaks in the direction of the current trend, and a CHOC is where price breaks in the opposite direction of the current trend. If you want to be a true smart money trader, you won't just chase the break. You'll wait for the actual confirmation candle. Once confirmed, mark your level for a potential entry. And here's a crucial tip. Always set your stop loss just beyond the recent structure. For example, if you're trading a downtrend, place your stop loss above the recent swing high. If you want to increase your edge even further, combine these breakouts with liquidity zones, order blocks, or supply and demand zones. This will help you pinpoint precise entries and improve your risk. But remember, not every breakout requires a stop trade. Sometimes price might just do a slight retracement and continue in the same direction afterwards. It's essential to understand the complete price movement, not just a single breakout. Let's take a quick look at some examples. In an uptrend, when price breaks above the previous higher high, that's a BOS, indicating potential continuation in the uptrend. Conversely, if price breaks below the previous higher low, that's a CHOC, suggesting a possible trend reversal. Similarly, in a downtrend, a break below the previous lower low confirms the downtrend, while a break above the previous higher high signals a potential trend reversal. Let me give you a real-world example. Imagine you're trading on a 15-minute time frame and you see price breaking below the previous higher low. This would signal a potential trend reversal. You could then drop down to a lower time frame, like the 1 minute, to confirm the change in momentum. If you spot a large lower wick on the candle, that could indicate a significant shift in sentiment. Once you've identified this as a valid CHOC. So to recap, when trading, start with the higher time frames to spot the overall trend. Then move to the lower time frames to watch for either a BOS or a CHOC. Use this along with other smart money techniques like liquidity void, order blocks, or supply and demand zones for better entries. Always remember to set your stop loss just beyond the recent structure and keep learning to become a better trader. This took a lot of research, and I made this video because I was tired of seeing people get confused between the two. So if this helped you, please hit like and comment smart money below. Also, consider subscribing. I post breakdowns like this every single week. Thank you so much for watching, and I'll see you in the next video.